Is Monday, and we talk money talks on a Monday, and today we're talking about credit. Ironically, interest rates are discouraging, or high interest rates are discouraging people to use credit to cool down the market, but at the same time, high interest rates are forcing families to dip into more credit simply to get them through the month. South African consumers are heavily reliant on the ability to use revolving credit. In fact, our use of credit on this basis is at its highest level since April 2010. That's according to TransUnion's 2022 SA Consumer Credit Index. And this is, of course, unsurprising given the strain on people's pockets due to high rate hikes and a very, very weak job market. Ayanda Ndimandi is the head of business development at Sanlam Retail, talks to us now about credit utilization. Good morning, Ayanda. Firstly, what is credit utilization?
Good morning to you and your listeners. So credit utilization is basically what the creditors, the banks use to assess how much of credit, how much revolving credit you are using as an individual versus the overall credit that you've been granted. As you would know that, like when you apply for a credit card, you are informed that, you've got access to 10,000 Rand. So your credit utilization ratio is made up of how much of that 10,000 Rand are you currently using.
So, in fact, trying to determine your use of credit and whether it actually negatively impacts on your credit score.
Yes, absolutely. It's in terms of how much are you using and how much are you actually able to pay back, or are you just, you keep going back to withdraw from that 10,000 that you've been granted.
So if your credit card with 10,000 Rand as a limit and you use 3,000 of that, your credit utilization rate is 30%, and that has the ability to negatively impact the credit score. But the question then remains, why are banks offering you 10,000 Rand credit, and that's just an arbitrary figure? Why is the bank offering you 10,000 Rand credit, knowing that if you were to go to 90, 95, 100% credit utilization, that you may not be able to pay that back responsibly?
Well, the creditors will allow you credits that you can afford, right? And then with revolving creditors, you use and you pay back because there's terms and conditions that you sign up for, right? So it doesn't necessarily mean that you cannot use the full 10,000 Rand because, according to the affordability score, you could afford it. But it basically means that, use what you are able to afford. So if you take the 10,000 Rand, you need to pay it back as soon as possible. The accepted credit utilization ratio is usually 40%. So once you're above 40%, you are viewed as a bit risky, which is why it then influences your credit score. So the higher you are with your utilization ratio, you will be affected negatively on your credit score.
Let's talk to the point of managing credit utilization effectively. What do you do? And I think, as you mentioning earlier, it's about being proactive when it comes to whatever credit you need to replay.
Yeah. So the responsibility will always fall on the consumer. It falls on you as a person who has applied for credit. So I would say that when you apply for a credit card, because in this case we're talking utilization ratio, if the bank offers you 10,000 for an example, and you know that you are not looking for that amount, ask for a limit on your credit card. Ask for a 5,000 Rand limit, for an example. That is less than what they're offering you. And that you should know your own behavior. If you know that if I've got exposure of the 10,000 Rand and I know that I'm just going to use it, ask for that limit for yourself. Put control measures, and once you've used whatever that you've taken out, ensure that you pay it back as soon as possible. Hence, I say the responsibility will always lie on you as a consumer because you need to manage your own behavior.
What is currently happening at the moment with these high rate cycles is that people are having to pay more for loans and their home mortgages. But that is having the effect that many people are then having to resort to revolving credit simply to get them through the month. The key here is the practice of restraint.
Yeah, absolutely. Because, with the increase in the interest rate, it affects everything. It affects, the food prices. It affects a lot of things that we pay for, the home loans, the vehicle financing. The last thing that you want to do when you find yourself, highly exposed to credit is to go and create more. So I would say first things first is budget. Look at what you have versus what you are now going to be paying. Because I think now after the increase, what we get is we normally get SMSs from our creditors telling us what the new premium is going to be. So go back and view your budgets and rebudget. Look at, where you might borrow or maybe reduce a bit on your lifestyle, the eating out. Secondly, go and negotiate with your creditor if you feel that, I cannot manage this. Negotiate and look at a better plan of paying back, and then make sure that you stick to that plan. But really do try and avoid going to excess revolving credit because, these interest rates are going up and we don't know when the cycle is going to dip again. So just budget and control what you can.
Ayanda Ndimani, Head of Business Development at Sanlam Retail. We talk money on a Monday, and we just spoke about how when you use credit and how it impacts on your credit score when it comes to the utilization of the credit that is offered